Since the start of 2022, the S&P 500 is down just over 10%, Tesla is down around 35%, and Palantir is down 45%. So if that doesn't give you a good idea of what's going on in the stock market right now, I'm not sure what will. But yeah, there's no way of sugarcoating it. Things are pretty bad in the stock market right now, and pretty much the same could be said for cryptocurrency, with that also seeing quite a downtrend since the start of this year. So in this video, we're basically going to discuss if it is a good time to sell out of all your stock positions and just save yourself the hassle, because there could potentially be more pain coming in the market in the next couple of months here, or is it a good time to double down your positions or just continue as normal? We'll discuss all of that in this video. So as always, if that sounds good, please take a second to go ahead and drop a like on this video. It really does help push this video out to more people and help the channel continue to grow. We're very close now to 5,000 subscribers, so really appreciate all the help. Generally, if you invest in the S&P 500, you can expect 7 to 10% returns on average each year that you're invested. But this year, as I mentioned at the start, the S&P 500 is already down 10% in just the space of 2 months. So if we take the average, even on the higher end of the scale being 10% per year, that means we've basically lost a whole year of gains just in the space of 2 months. But if we do take a second and zoom out and just go over the last 12 months here, we can see that the S&P 500 is actually up 10%. So it's not all doom and gloom over a bit of a longer term scale, but of course there's lots of bad things happening right now that are really affecting stock prices. Here's a good illustration of all the times that there's been things in the news and economic factors that have caused the stock market to have a bit of a fall. But as you can see, no matter how many things come up here, even the likes of COVID, the whole pandemic, and now with this whole World War III stuff, you can see that it's still continued to go higher. When it comes to investing, a lot of people consider things like this noise. Of course, it's not easy to dismiss the thoughts of a World War III, for example, as noise, but essentially what they mean is it's short-term factors that will affect the stock price, but overall, if they continue to keep investing, over time their money will grow. And of course, we can't predict the future, but going off historical data and on that chart that I just showed you guys, it has generally tended to continue to go upwards no matter what negative catalyst may arise. If we take a look at Tesla stock, for example, back in October it was trading around just under $800, and then it zoomed all the way up to $1,200 just in the space of about 1 or 2 months. And when it was at that stock price, a lot of people were thinking, if it gets under $1,000, I'd be more than happy to buy back in. And if it went as low as $800 again, or $850, I would be more than happy to put more money in. And when it comes down to it, as we're seeing today, it's not quite as easy as that. This comes back to one of my investing principles, which is that I try not to invest in anything that if it went lower and the fundamentals haven't changed, I wouldn't put more money into. And if we look at the likes of Tesla with all of this World War III stuff going on and the other scares with inflation and that, have the fundamentals of the company changed? And for me, I would say no. So that should be a good opportunity for me to add more to my position when it is on a discount like this. But for example, if I'm investing in a stock that I haven't done that much research into, and then it starts to go down and I haven't done my fundamental analysis and don't know enough about the company, I would probably just get scared and either sell out of my position or not add any more. And that's of course missing out on some potential gains there. And of course you can't be right every single time, but you need to equip yourself as best possible by understanding what you're investing in. This can also be a good opportunity, which is essentially what I did last time I seen a big correction, was to double down on my high conviction plays, and essentially I sold most things and increased my conviction in Tesla, giving it about a 95% weighting in my whole stock portfolio. Now of course this is not financial advice and I'm not recommending anybody to follow what I did, but it's just an example of where I was confident in Tesla over the long term and decided that these other short term plays I didn't have as much confidence in, so I decided to just allocate more to Tesla. Now of course you don't have to do it on such an extreme scale such as 95%, but if there are some stocks there that you're just not quite sure on, not sure if they'll do well over the long term, and you have maybe other stocks that you have more confidence in, it might be a good idea to consider consolidating your positions and doubling down on them high conviction plays. And one of the best investment strategies is just simply something called dollar cost averaging, or if you're from Ireland like myself, you could call it euro cost averaging. Essentially what this is just continuing to buy into whatever investments that you're doing, such as the stock market, on a consistent basis. So for example, if you're doing 500 a month and then suddenly there's a 20% drop, you just continue to do that 500 a month. If then there's a 50% increase, that month you still put in your 500 a month. It may seem counterintuitive, but it's essentially taking out the aspect of trying to time the market, and instead you're just continually buying. You'll buy the highs, you'll buy the lows, and overall you'll end up with a good average price. And that's what a lot of people do, and it has proven to be a great investment strategy, and it's something that I tried to follow myself, although I am definitely guilty of, and it's not really a bad thing, but when certain stocks go on a discount, I am more likely to move some of my cash reserves into the stocks just to take advantage of these dips. But as I mentioned towards the start of the video as well, there could potentially be some more pain coming. We're really at an interesting point here now with the Ukraine and Russian conflict, and it could end up to be very, very bad, or it could just go away. Hopefully it is the latter there and it does end up going away with peaceful means, but it could definitely get worse, and that could mean the stock market could go down even further. So if that's something that you think is maybe going to happen or has a higher percentage chance of happening than the latter, it may be a good idea for you to decrease some of your investment amount, maybe continue to dollar cost average in, but just for a smaller amount, and start to build your cash reserves. And then if it does reach a certain level where you'd be comfortable getting back in the market, it could be a good idea to start putting some more money in again then. But then again, you're coming down to the idea of timing the market, and at the end of the day, nobody really knows which way the market will go on a certain day, a certain week, or even a certain month. But I can definitely see the case for wanting to have some extra cash reserves on the side in case there is some more pain to come, and it's something that I'll be positioning myself to do as well. But at the same time, I'm not going to stop investing. I'm still going to be putting in some on a monthly basis into my favorite stocks. So just to summarize some of the takeaways, generally, no matter what happens in the stock market, it's a good idea to just dollar cost average, whether it's the S&P 500 or it's one of your high conviction plays like Tesla, for example. Just continue to dollar cost average into these stocks every single month if you do believe in them. Secondly, it's know what you're investing in as best as possible. You don't need to go into infinite amounts of detail, but generally understand the direction the company is going and what they're doing. I suppose this is called the fundamentals. And then if them fundamentals change from why you first invested in the company, it may be an idea to look for an alternative investment. But if the stock is going down and the fundamentals haven't changed, it should be an opportunity for you to buy more or at least hold your position. And finally, the saying of if in doubt, zoom out, and essentially just take a step back. A lot of the stuff that we're experiencing right now may turn out to just be noise in the stock market, and overall the trend will hopefully continue to go higher, and that's just the confidence that we need to have in our investments. Anyway guys, everybody's different and I'd love to know your thoughts on the current stock market. Anyway guys, everyone is different and I'd love to know the different approaches you guys are taking with the stock market and even the cryptocurrency market right now. So let me know down in the comment section below what your moves are. Anyway guys, thanks so much for watching. Hopefully you did enjoy this video. If you did, it would be great if you could take a second to drop a like on this video if you haven't done so already. And if you're new around here, please consider subscribing as well. Thanks so much for watching and I'll catch you guys in another video.